All right. So yeah, a disclaimer. This is not a financial class. I'm not trying to give financial tips or financial advice. I'm just sharing concepts that has worked for me, and I feel sharing this to other people also will enable them benefit from what I've been benefiting from. So this is just a way of building a community of like minds where we can grow together and get something reasonable out of whatever it is we're doing. So, getting into it, I want to say this also. Forex is not a get rich quick scheme. Forex is not something that you come into and you expect to make money off it immediately. It takes time. Or let me say it can take time. Learning, unlearning, trying several things, trials and errors. That is what Forex entails. And to be a good trader, one thing you can do for yourself is not quitting. Because starting out, there are possibilities that you encounter some losses. Mr. Sam can bear me witness to that. He's been there, and he sort of knows quite a number of other people that you know has been in that same shoe. But one thing they will all tell you is their personal mistakes make them lose. Because before I do anything, I'll tell you what everything it entails before you get yourself into it. So once again, please, Forex is not a get rich quick scheme. If you're looking for fast money and you want to spend less time learning, Forex is not for you. You need to be able to take time to learn, learn, and learn. In Forex, learning never ends. You don't know it all because there are several strategies that will come your way. And what will make you different is being able to have your own strategy, being able to build a strategy of your own from everything that you have learned from whoever is guiding you, building your own strategy and sticking to it with your life. Yeah, with your life. That is what will make you a good trader. And this is one of the things that has helped me over time since I started trading. Okay, so one of the very basic things that we need to understand as traders is the candlestick. The first class I started where Mr. Sam was, I actually didn't go deep into understanding the concept of candlesticks with them. And I'll say I'm sorry I did not do that, but now I'm trying to fix things all over again. So understanding your candlestick is one of the very key things that you need to know when trading Forex. Because your candlestick can actually give you an insight into what is happening in the market. And that's the reason I shared the ebook I sent in the group that everybody should go over that ebook to understand what each candlestick represents. So let me share the whiteboard. Can you see my screen, please?
No, I can't. No.
Okay.
Yes, sir.
I mean, no, I can't.
Can you see it now?
No, I'm seeing only a picture. No.
I'm sharing a
I can
whiteboard.
hear.
Can you see the whiteboard, Mr. Sam?
I'm not.
Yes,
Hello.
sir.
Using my network.
All right. So if you can see the whiteboard, Mr. Mike, maybe you might have to maybe exit the call and join again. Your network might be causing that.
Okay, let me.
Mr. Sam, I hope you can still see my screen.
Yes, sir.
All right. So, talking about candlesticks, we have different types of candlesticks. We have different kind of candlesticks, and each candlestick has something it represents. But in the most general context, what many people know is just okay, the bearish and the bullish, and the bearish, the bearish candlestick and the bullish candlestick. These are the things that many people understand as candlesticks, but it is far, far deeper than this. If you're talking about the bearish and the bullish candlestick, you'll the general idea that many people might have is okay, admit. The general idea is when the market is going up in an uptrend, that is when you have the bullish candlestick. I don't know if we're still together.
Yes, sir.
All right. And the bearish means a downtrend. But really, it is not just about the uptrend and the downtrend. It's not about the colors. Maybe it's green, it's blue, or it's red. If you look closely into your chart, you'll see different forms of candles. And in it, I will be mentioning only a few tonight. We have the doji, which we also call indecision bars. Indecision candlestick. Uh, okay, so let's talk about this indecision candlestick first. And this is what an indecision candlestick looks like.
It's not a display, no.
You said what?
It's not displaying yet. I don't know why. I've left this and come back again. Still showing the same thing.
Mr. Sam, but you can see everything I'm typing, right?
Yes, sir.
Mr. Mike, so what is going
Come
on?
on, put my phone in airplane mode. Come.
Since you're close to Mr. Sam, maybe you should just look into his screen so you see what we're doing. So an indecision candlestick, pardon me, I really don't know how to draw so well. Something like this. Let me see if I can get a shape. Mm, sorry. Okay. I believe we can see what I'm doing.
Yes, sir.
All right. So basically, this is what an indecision candlestick looks like. It has this tiny wick, up and down, and in the waiting. All right. That's the stuff up and down, not so thick, but very light. This is a perfect example of an indecision bar. This is what we call a doji. And anywhere we see this in our chart, it means that there's going to be a change in the movement of the market. Either the market goes for a buy, which is uptrend, which you can also call a bullish movement, or it goes for a sell, which we call a bearish movement. That is
Bearish
what
moment.
this candlestick stands for. Please let's check the WhatsApp group. I'll be sending something.
Screenshot, Abi.
Yes.
Huh? Alright.
Please check the WhatsApp group. I just sent something. Have you seen it?
Yes.
All right.
Yes.
So this is a perfect example of, let me bring this here to the Zoom meeting. So I'll be sharing my screen and okay. Can we all see this?
Yes, yeah, I
Yes,
can.
sir.
Okay.
Hello?
I'm coming. I'm trying to. All right. So, like I was explaining, have we seen where the indecision bar is here? If you can see my mouse, this is an indecision bar. Can we all see
Yes,
it?
sir.
And
Yes, sir.
yes.
Yeah. So when you're trading and you see something like this, it is best for you to hold on and see where the market is headed before trying to take your trade. The color it brings doesn't really matter. Some people will tell you if it is a red doji or a green doji. If it's green, it's going to be a bullish move. If it's red, it's going to be bearish. But I don't subscribe to that. When you see a doji, anywhere you see a doji, just hold on, see what is going to happen with the next candlestick before taking your trade. And here are some of the other things we need to look out for. If you've been in trades for a while, you must have seen things like this. This is what we call the Marubuzo. These are the stars. When you see this type of candlesticks,
Yes,
these
sir.
are neutral candlesticks. They are really not, they're not very functional. But you'll see more of this guy, this Marubozu, at a support. You'll still get there. You mostly find a Marubozu candlestick at the support level. Then these stars, these ones can come in at any time. And also coming to the single candle patterns from this place, 1, 2, 3, 4. All of this are bullish movements. When you see this candle, this particular one my mouse is on is called an AMA. So when you are trading or when you are trying to make your analysis
Yes,
and
sir.
you find something like this in your chart, what will follow this type of a movement will be an uptrend. You see 3 bearish bars and this AMA here. We call this an AMA.
Yes,
This
sir.
this bullish bar that closed at the top is called an AMA. When you see it, the next movement will be an uptrend. Equally, when you see an inverted AMA, you see this one is facing down.
Sir.
Mm.
And the analogy of this, or the analysis of what happened to this particular candle, this AMA itself, is, we have three candlesticks coming, which are bearish.
Yes, sir.
Mm.
This fourth candle that has the green was also supposed to close bearish, but there was more of buyers in the market at that period, which forced the market to close as a bearish candle. If you want to backtest this, there's something we call backtesting. That is when you find a strategy and you're trying to make analysis with it, then you check the previous charts to see what has gone in the market. Then you'll be able to bring your strategy into what has happened in the previous chart. If your strategy aligns with what happened in previous charts, there's a high probability that when you use that same strategy to take trades, to place trades, it will come out well. So if we try to analyze this, we will see that this candle, this particular candle here, was
Yes, sir.
a bearish candle, but closed as a bullish candle, forming the AMA. Same thing applies to this inverted AMA, and same thing applies to this dragonfly doji. Please, are we understanding it? If there's anywhere
Yes.
you don't understand, please bring me back and call my attention to it.
Can you please recap from the first AMA again?
This?
Yes, sir.
Okay. What I said is the reason why we have this AMA shape
Okay.
here is
Yes, sir.
because we had an inflow of more buyers. We had more buyers in the market at that period, which forced this candle to close as a bullish candle.
Okay. Okay.
If we were on a live chart and something like this happens, when this candle opens up, it will open as a bearish candle.
Okay. But it will close as
As
bullish.
bullish, exactly. And that is because during the course of the trade that brought this particular candle, more
Yes, sir.
buyers were in the market,
Okay.
which forced this candle to close bullish. So any other thing that comes after this candle
Yes, sir.
is going for a buy, straight up.
Wow.
So when you see something like this, you see three bearish candles and you see this AMA form, just prepare to take a buy.
Okay.
Prepare to take a buy. The same thing applies to this inverted AMA. Same thing applies to Dragonfly Doji. Same
I have
thing.
a question about this Dragonfly Dojo.
Okay. Please go ahead.
When you explaining about dojo on its own, you said we
Doji.
should first. Okay, it's doji. All right.
Yeah.
You said we should not we
Take
should
trades.
calm down. Then yes, we should not take trade at that moment. We should just watch the market and see how it's going to go. Now this
Yes.
Dragonfly doji is looking just like that doji. Now
Okay.
what differentiates this Dragonfly doji and that other doji at the top?
All right.
Besides this neutral, that's what
Thank you.
differentiates both of them?
Thank you for that. If you look at this one here, this doji we have here, if you look at it closely, you see it has an upper wick. We call this ends wicks. These tiny lines up and down. We call them wicks. And some people call them tail. If you look at this one here, it has a wick on top. But Dragonfly Doji doesn't. When you see this particular doji, you don't know where the market is headed yet. That is why we call it an indecision bar.
Yes, sir.
Mr. Mike? Are we together?
Yes, sir. Yes, sir. Yes, sir.
That is why we call this
Ah,
an indecision bar, because we don't know where the market is headed when this
hello,
guy
sir.
comes up. I'm with you, sir. You have a question?
Yes, sir. I noticed the mouse is not moving from my one end here. I don't know if um
My mouse or your mouse?
your mouse now.
Oh, really?
It's not moving. Now it's moving now.
Oh, that's the network. That's the network.
It has stopped moving again.
Oh, okay. Let me just try to explain from what you can see. Look at the bars we have under neutral to the top right of this picture I'm sharing. Can you see it?
Yes, sir.
Okay. Then look at doji. Can we all see doji?
Yes, sir.
Yes, sir.
Okay. If you look at doji, you see this a straight line looking like a cross, like a plus sign.
Yes,
Yes,
sir.
sir.
There's a wick on top of it. But if you look at dragonfly doji, it doesn't have that upper wick. Dragonfly doji only has 3 bearish candles and a T. Yeah, that's a perfect word. A T.
Yes. Yes.
Mr. Mike, can you spot the difference now?
Yes. One is looking like cross. One is looking like a T. Yes, sir.
Exactly. So Dragonfly Doji has 3 bearish candles and a T. Let's just put it that way.
Okay.
The T represents the Dragonfly Doji. I think that's
Okay.
sort of like the easiest way to put it. It's looking like a
Yes, sir.
T, while
Yes, sir.
Doji itself has an extension on top of it. Are we getting it?
Yes,
Yes,
sir.
sir.
So anywhere we see any of this movement, Ama, inverted Ama, Dragonfly Doji, bullish spring top, bullish spinning top, they are all signals for a buy, which is an uptrend. Okay, we're running out of time. So if this meeting closes, I'll create a new one. This one will be closing in 9 minutes. I'll create a new link which I'll be sending into the group. So are we together, please? Anywhere we see any
Yes,
of these candlesticks, this movement, 1, 2, 3 with a green, this way we're having, well, the next trade we'll be going is going to be for a buy. And the same thing applies for these other ones here, just the opposite. These are bearish candles. When you see 3 consecutive bullish candles and a hanging man, if you look closely, this hanging man is not an armor. Please look
sir.
at it very well. It is not an armor. The head here is a bit larger than the head of an armor, which we have for a bullish trend.
Yes, sir.
So anywhere we see this kind of movement, prepare to take a sell. That means the market will go down. It is no longer going up, it will go down. This other one here is called the shooting star. If you look closely, you'll see that the bars we have here are thick.
Yes, sir.
This is telling you that this market has been going up very strong. It is buying at a strong pace. And it was supposed to buy at this point also, but we had what? We had lots of sellers in the market, which made this particular candle to close as a bearish candle. And when we see something like this, the next thing that is happening is going to be a fall. The market will fall. The market will continue to sell. The same thing happens for a gravestone doji. This is like an inverted T. Here we have dragonfly doji, which is taking the shape of a normal T, right? And over here we call this a gravestone doji. It's inverted. It's an inverted T with 3 bullish candles. And here we have the bearish spinning top, just like we have this here. Bullish spinning top, bearish spinning top. So everything you see here is just opposite of what we have here. Please, are we understanding?
Yes, sir.
Yes, sir.
So depending on the type of trade you want to take, the first things to look out for is the movement of your candlesticks. What type of candlesticks do you have on your chart? That is just a part of technical analysis. There are so many analyses you can actually do just to get your confirmation for the entry of a trade. But one of the first things you'll look out for is the movement of your candlestick. You'll still be getting to market structure. You'll be getting to understanding what pushes the market, what makes the market moves. But I just need us to understand the basics. I need us to understand the basics. And, making use of these candlesticks here, understanding them is one of the reasons I said everybody should create a derivative account. So you can easily go to your derivative account, open your chart. Okay, let me drop this link in the WhatsApp group so you can, in case you're having difficulties getting on the, what's it called? Getting your chart loaded on the derivative website. So you just come here. So you can make use of that chart, of that link to load your chart. In the next link I'll be dropping for the new class, I'll be showing you how you can set up your chart to get a perfect understanding of how to read your candles. So we have about 4 minutes left. Let's quickly talk about this double candle patterns. Here we have the bullish killer. When you see something like this, expect a bullish movement. Please, I need you guys to watch these candles very closely. You just need to understand all of these movements. This is the bullish kicker. This is the bullish engulfing. When you see this bullish engulfing, the bullish bar will take over this bearish candle you see here. It's not like maybe this the bearish bar will have a wick coming down a little below the bullish bar. The bullish bar, this particular one here, must close both on top and below, and you'll be seeing the bearish candlestick inside of it, just like we have here. If you look closely, let me zoom in. This wick here is closing below the wick of this bearish candle. Are we seeing my screen, please?
Yes, sir.
All right.
Yes, sir.
And this also on top is closing above it. So this is a perfect example of a bullish engulfing candle. When you see anything like this on your chart, please go ahead and take a buy. There is nothing else happening in this market aside from a buy. Same thing applies to this. When you see something like this, this is also a bullish movement. Pearson line is equally a bullish movement. You'll mostly find this also at a support. And we'll equally get there. We'll get there. Tweezer bottom, most likely to be found at a support zone also. And this one's here, the bearish kicker, is giving you a signal to take a sell. Bearish engulfing, giving you a signal to take a sell. Bearish Arami, dark cloud cover, tweezer top. They are all giving you confirmations to take a sell. Please, let us put all of these things into consideration. When you see things like this, prepare your trades for a sell or a buy. Anything from this line to the right is for sell. From here to the left is for buy. So please, let's note all of this. The triple candle patterns. This is the morning star. Mr. Sam must have seen things like this several times, but you may or may not
Yes, sir.
have known the meanings of what you're seeing. You can actually make use of this candlesticks to trade rise and fall. I've tried it several times and it's something that works, but with a little bit of other analysis actually. But when you see things like this, if you want to backtest what we've done, you can just go into maybe a 5 minute or 15 minutes chart to observe these candles and see what happens after these candles were formed. You don't have to take trades, just go into a chart, look for each of these candles and look at what happens after these candles form. Okay, we're having less than a minute, so let me just stop this particular video then share a new link. Okay.
Yes, sir.
All right.